Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Emmanuel Macron vows to serve out his term as French president, promising to choose a new prime minister who will work with everyone. In our exclusive interview, National Rally leader Marine Le Pen tells us a budget will pass if the government narrows the deficit more slowly.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together.
South Korea's ruling party leader now says the president should be suspended, a major shift ahead of an impeachment vote for treason. And Chinese stocks gain on stimulus hopes. European and S&P futures edge lower as investors await US jobs data later today. Happy Friday. European futures pointing lower by 0.3% after 6 straight days of gains, despite the political uncertainty in France. We've seen that story turn around as well in terms of a day when the futures are pointing lower and then you end up in positive territory. We'll see if that plays out again today. You'll see if we get 7 straight days of gains. We've had 6 straight days of gains, and if we get a 7th over in France, that would be the longest winning streak for French equities in 3 years. Pretty remarkable, again, given the standoff we're seeing politically in Paris. FTSE 100 futures pointing lower by 0.2%. S&P futures, after a modest drop of around 0.2% yesterday, pointing lower by about 0.1% so far in the session. We look ahead to non-farm payrolls, of course, with a print expected of above 200,000 for the month of November. Nasdaq 100 futures currently flat after some losses yesterday as well, around 0.3%. The Russell 2000, though, took a bigger hit in terms of the small caps stateside. Let's flip the board and have a look cross asset markets. Expecting still about a 70% chance of a rate cut, another one coming through from the Fed on December the 18th. We'll see if the jobs data adjusts that. The unemployment rate expected to remain at around 4.1%. That is the overall forecast, though Bloomberg Economics thinks it could tick up to 4.2%. Again, the overall number, you're looking at around 200,000 for the month of November, though we know there's some uncertainty around that. The US 10-year currently yielding you 4.17, euro dollar at 105, currently a little softer by 0.1%. Brent at $72 a barrel. We had that decision by OPEC Plus to push out until April, adding any new barrels to that market. Concerns about a surplus. Bitcoin pairing some of those gains. 97,000 right now for the cryptocurrency, down 1%. Let's get to the politics of France now, because French President Emmanuel Macron says he will serve out the remainder of his presidential term as he seeks to put an end to the political turmoil in the country.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new prime minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agree not to bring it down. The prime minister will consult and form a more effective government at your service. Its priority will be the budget.
Meanwhile, far-right leader Marine Le Pen told Bloomberg in an exclusive interview that she believes the outgoing administration's plan to bring the budget gap to 3% of economic output by 2029 is not feasible.
Getting to 3% in 2029, I don't think it's credible, but I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes. Once again, these are simply promises, and they know very well they can't keep to them. Mr. Barnier made this promise, and in reality, his budget worsened the deficit by 12 billion. So, if we don't make significant, intelligent structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with these two solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be?
C'est l'affaire de quelques semaines.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxes, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state. That's inadmissible.
OK, the National Rally leader, Marine Le Pen, speaking exclusively to Francine Lacqua, who joins us around the studio right now. Back from Paris then, Fran. What else did she have to say about the budget?
Tom, good morning. We had a great conversation. It was about 18 minutes long. And actually on the budget, she was quite interested in speaking or making a message to the markets. First of all, she looks at the markets. The first thing she said as I walked in was, look at the markets. They're not too worried about what happened, because in France she's getting a lot of blame for having almost dissolved the government. Now, on the budget, she had a very long-term view, and I was surprised that she said, look, some of the things that they promised, so it's at 6% of GDP this year, it'll get to 5%, 3%. She says, we need to take a good look at that. She says, why 3%? We need to make sure that it's sustainable. But the fact that she's looking at the markets and at least knows that she wants to stay within the EU rules, maybe it's of some comfort to the market. So it's very clear that she thinks the next Prime Minister will be tasked with making her happy enough to vote him through. So she, struck this message of conciliation, saying, look, I'm ready to work with, no matter who he appoints, it's the policies that I'm interested in. And I think she's hoping that taxes will come down. That felt to me the one thing that she was hoping for.
Yeah, I mean, it's really interesting. Whatever one may think of the brinkmanship, whatever one may think of her politics, she's right when it comes to the markets, isn't she? I mean, French stocks are up for 6 straight days. And on the back of your conversation with her, that spread over the German debt narrowed. So she has a point. Why are the markets, what is your understanding of why the markets are relatively, within the context, relaxed?
Yeah, so frankly, it's a little bit odd, because if you look at the next 5 to 6 months, it's very difficult to see a way forward. If you look at Parliament, I mean, remember, they have to find a government with the 3 blocks in Parliament. They're extremely difficult. You have right, far left, and then you have a centre which basically disintegrated. So it will be very hard to find a broader coalition than what M. Barnier had. I think the markets are probably looking at the ECB as a backstop, saying, look, no matter what happens, they're there to react. And remember, it was such a shock when Emmanuel Macron dissolved Parliament back in July that kind of hit French assets. So maybe the markets at the moment are in a bit of a wait-and-see situation, thinking it can't be as bad or as concerning as what happened in July.
Yeah, a lot of it already priced in. The ECB maybe as a backstop. When do we get a new PM then in France? So
when we spoke to Marine Le Pen yesterday, she was pretty sure, and actually she said in the interview that she thought a Prime Minister would come yesterday, actually, almost the day after the dissolving of the government. We didn't get one. We heard, of course, from Emmanuel Macron that he vows to stay on. There's a lot of pressure, and you can really feel it when you're in France. There's a lot of pressure for him to resign. There's really no reason why he should resign. Marine Le Pen has not called for his resignation, so it looks like the president stays until 2027. But the longer he delays it, probably the longer he gets accused that it's his fault. And then, of course, Donald Trump shows up with with 50 heads of state for the reopening of Notre Dame. So I was expecting something before then, so that it takes the attention away from the nomination of the Prime Minister. But I guess, Emmanuel Macron doesn't have a good name yet.
OK, still waiting for that name, still waiting if he can land on someone that will maybe appease all sides of this political debate, though that seems like a challenge, to say the least. Francine Lacqua, thank you very much indeed with that exclusive conversation with the power broker in Paris right now, in France, Marine Le Pen, of course, the head of the National Rally. Some breaking lines right now, and we move from the politics of Europe to the politics of Asia, and the uncertainty there, of course, focused on South Korea. Some lines crossing in terms of what we've been hearing as we look at moves, of course, to impeach the president on the back of that imposition of martial law, even if it was only imposed for 6 hours. Remarkable events, of course, earlier this week. We are seeing some live pictures right now. This is in Seoul, of course, the South Korean capital. South Korea's Yoon is in focus. The National Assembly Speaker will be giving an address at 3:20 p.m. That is according to reports out of South Korea. South Korean opposition lawmakers will be blocking, and are blocking, this is apparently the pictures that we're seeing, the president from entering the National Assembly. Appears to be what we are seeing right now. These are live pictures. You can see the confusion there. That appears to be lawmakers blocking the entrance. Again, according to reports, to, of course, the South Korean president. We continue to monitor events there, as it seems moves are underway again around that impeachment, given that the leader of the political party in which the president sits has now suggested that he is willing to move ahead with those impeachment proposals. Let's bring in right now So-Hee Kim out of Seoul. What is the latest? Explain what we are seeing on the ground. in the capital of South Korea and where we are in terms of moves to impeach the president?
Situations here in South Korea are dramatically shifting every hour and then every minute. So we heard the breaking news now that President could shortly arrive at the National Assembly to meet ruling party leaders. But 5 minutes ago, the presidential office announced he's not going to come to the National Assembly today. So there are a lot of confusions and misleading information. So we are continuing to monitor the development of news unfolding the historic moment at the moment. So this comes after the ruling party leader Han Dong-hoon just finished his meeting with President Yoon after he changed his stance overnight, saying Yoon's duty should be suspended immediately. So the next 24 hours will be so crucial to see the next developments as the impeachment vote is scheduled late afternoon tomorrow. For the motion to be successful, the opposition party needs only 8 supporting votes from the ruling party.
Sohee Kim in Seoul, thank you very much indeed, reacting to the breaking news and clearly the situation on the ground in the South Korean capital changing very quickly indeed. The South Korean presidential office saying that the President Yoon will not be visiting Parliament again, according to reports. We keep across this story for you as the developments continue. Let's get the market reaction right now. Bring in Avril Hong in Singapore. A good day for Chinese assets and Chinese equities. A challenge again when it comes to the equity markets of South Korea.
Yeah, it's interesting to see how South Korea's benchmark is pairing some of the earlier declines, even amid the uncertainty in the country and what you just heard from Sohee. It's on a day where investors overall are really cautious because it's not just the South Korean political turmoil. Investors are also looking ahead to the U.S. jobs data. China, as you say, is an outlier. There is optimism surrounding stimulus ahead of a key economic conference next week. There's also been talk about Trump's pick for ambassador to China. That's somebody that spent a lot of time in the Asia region, highlighting as well what we're seeing in dollar-yen, because today we did get some wage numbers which support the case for the BOJ to hike. So dollar-yen sitting below the 150 level. Flip the board and let's recap what we've been seeing on dollar Korea won this week. Just looking at that spike earlier in the week following the late Tuesday shock announcement for martial law. And I wanted to highlight what we're seeing also more recently today, because that news in local media of second martial law, of course, that's something that's just been dismissed by the Special Forces chief. But I wanted to highlight how this spike just shows you how on edge investors are about the political situation in the country. The Korean won today, the decline on a day where most Asia currencies are actually climbing against the greenback. Tom.
Yeah, the market move is interesting, isn't it? Watching the currency and the impacts around those rumours of potentially a second attempt at martial law, that, as you say, that has been dismissed by military leaders. Avril Hong in Singapore, thank you very much indeed. Let's focus in on the jobs data then that Avril touched on. The key data point of the day, of course, when it comes to these markets. The Fed's decision as well, how that impacts the Fed's decision. Markets now pricing at about a 70% chance of another cut from the Fed on December the 18th. Bloomberg's NLive's Mark Cranfield with the analysis. Mark, what are you and the team going to be scrutinising when it comes to the jobs data out of the US later?
Well, traders are really focused on that unemployment rate. There's a lot of moving parts. There's the non-farm payrolls to consider. There's the average earnings. But really, it's all about that 4.1% estimate for the unemployment rate. It was the shock of going up to 4.3 earlier in the year in the July numbers, which was the one that prompted the Fed to do their 50 basis points rate cut. And so people will be looking at that very closely. Anything 4%, 4.1 probably means that the traders will be expecting the Federal Reserve to go ahead with another rate cut in December. If there's a shock and we drop to a 3 handle, if it's say 3.9% on the unemployment rate, that will be the last chance really for the Fed to go on hold. So really it's that unemployment rate that's very, very important. If it's anything in line, people will fully expect the 70% price for a rate cut in December, and they will be expecting the Fed to deliver that. So they'll pretty much look through the non-farm payrolls. There's a lot of distortions to do with the hurricane, but they will be looking for anything that can confirm that they're right on their betting that the Fed is going to go again and then probably start to hold in the first quarter of next year. So watch out for that 4.1% number later in the day.
OK, that's the number to watch, with Bloomberg Economics suggesting that maybe we get 4.2%. Mark Cranfield, MLive strategist, look through the non-farm payrolls print because of the uncertainty. Focus on the unemployment number. Mark, thank you for the preview for that data point. Coming up, OPEC Plus is accepting that its mission to defend oil prices will drag on much longer than expected. We discuss the oil markets next. We're going to bring you live pictures right now from outside the National Assembly building. Fairly chaotic scenes as lawmakers line up inside and outside that building in, of course, the South Korean capital, Seoul. We are hearing now from reports out of that country that the National Assembly Speaker has cancelled the address. We're also hearing that the President will not be visiting Parliament. You can see attempts there by lawmakers to make their views known after, of course, that shock imposition of martial law. We'll keep across this story for you throughout the programming. Stay with us. This is Bloomberg. Now, OPEC Plus is coming to terms with signs that its mission to defend crude prices will drag on much longer than expected. At an online gathering, the group agreed for a third time to delay the revival of halted production and to slow it down. Joining me now is Carole Nakhle, founder and CEO of Crystol Energy, for the analysis on these oil markets and this decision by OPEC Plus. Not a big surprise, Carole, of course. It is the third time, as we say, that they have delayed this decision. Will it be the last?
Well, if it's the third time, it doesn't have to be the last time, because OPEC is reacting to market conditions. Market fundamentals have not supported the arrival of more barrels to the market unless OPEC is happy to see prices going below $70 a barrel. And also add to that, we had significant geopolitical tensions, and still prices were trading closer to the 70s than they were to the 80s or 90s. So market fundamentals on the one hand, are not supporting additional barrels. But also there is another dimension, that is the geopolitical dimension, not in terms of war in the Middle East, but the arrival of President Trump to the White House. How would his policies look like? Because they would affect oil production and oil trade directly and indirectly. Domestically, is he going to deliver on his promise of achieving record production levels by supporting drill, baby, drill? And what about globally, his relationship with China, the trade tariffs on China, which is the largest oil importer in the world, the relationship with Iran? Is he going to go back to maximum pressure on Iran in an attempt to reduce its exports to zero? That's something he did not succeed in doing, but he managed to reduce them to 500,000 barrels a day, which would mean a withdrawal of around 1 million barrels a day of oil in the market. What about relationship with Russia? So I think it's sensible for OPEC to wait for the first quarter of next year before deciding what to do next. Whether they will postpone again, it all depends on the price signals that they are getting from the market then.
Carole, the IEA, I mean, given all of those uncertainties emanating from the incoming Trump administration, difficult to put a pin in it, as you say. The IEA suggesting that we could be in surplus throughout 2025, even if OPEC Plus doesn't add a single extra barrel of oil to these markets. Does that align with your assessment?
I mean, indeed, the IEA has always been cautious, especially for what we saw for 2024 in terms of oil demand outlook, but also for 2025, whereas OPEC has been the most bullish in terms of oil demand growth, and they have been the most ambitious with at least 1 million barrels a day difference with the IEA forecast. But so far, the IEA seems to have been vindicated. Its numbers are closer to what we are seeing in the market. For 2025, if we put the political uncertainty on the side, if we don't see a significant boost in the Chinese economy in particular, yes, I've subscribed to the camp that oil prices would be under pressure. And we're already seeing some business reports and business surveys. Yesterday, I read about something in the US that people are expecting WTI to trade around $60 a barrel for 2025. So the general overview for 2025 is that of rather depressed prices.
Yeah, and before we let you go, Carole, to that point, I know you've told me before that it's a fool's errand to kind of try and predict an exact number around pricing. But as you say, we've had the likes of JPMorgan, Citigroup suggesting that the Brent will be in the 60s next year. Just broadly, in terms of that range, does that seem reasonable as an assumption, given what we know now?
Yes, putting aside the political dimension, I think based on market fundamentals and the absence of significant stimulus in China, I think it's not unreasonable to look at prices range between the 60s and the 70s or even a little bit more. But this is a kind of current market sentiment. Mind you, it will change depending on how the situation will unfold in the coming few months.
Carole Nakhle, founder and CEO of Crystol Energy, on what we can interpret from this decision from OPEC Plus to delay once again for the third time, putting more barrels on the market, delaying until April, and expectations that story around a surplus for these oil markets will continue into 2025. Always smart on the oil markets. Carole, thank you very much indeed. We bring you live shots once again from the National Assembly in Seoul, the South Korean capital, of course, where you see lawmakers there standing at this event. The situation is clearly volatile. We're getting reports from local media suggesting that a planned address by the Speaker of the National Assembly has been cancelled. We're also seeing reports that the President Yoon, who of course made that shock announcement around martial law, that the President has cancelled that visit to the National Assembly, to Parliament, again, according to reports. Other lines crossing the last 12 hours or so, suggesting from some officials within South Korea that Yoon, in fact, ordered that lawmakers were arrested when he imposed a martial law. Military leaders, at least some of them in South Korea, now suggesting that they would not enact martial law if the president tried to push it through again. So it's a volatile situation on the ground in South Korea. We keep across that for you. The National Assembly Speaker asking Yoon to delay that trip to Parliament. There's a lot more coming up. Stay with us. This is Bloomberg. Now, the carbon capture industry is facing a reality check, with the pipeline of planned projects looking far from certain. Here to unpack what is happening is Anastasia Tomasidou, analyst in Bloomberg NEF's Sustainable Materials team. Anastasia, a really important story. Is the industry in trouble?
That's a great question. It's really been a year of cancellations. And on top of this, we've seen the investment drop to under a third of what we've seen last year. So definitely a reality check. And although there is 400 million tons of capacity in the pipeline for the end of the decade, we only expect about half of that is likely to come online. And this is because of many reasons, like the lack of midstream infrastructure or a lack of a viable business case and insufficient project economics, but also pushback from communities where these projects are located. And so the projects we think will actually commission are those that have reached financial close already or made major projects progress towards doing so. For example, awarded major contracts or received transparent storage permits or major government support. But the rest are at high risk of cancellation. OK, well, really interesting. And some headwinds. The headwinds are clear then. What is the situation in Europe right now? The Europe picture is a bit brighter, with more, the policy momentum growing and many of the major hubs in the region making progress. In fact, 3 of the major hubs have made significant milestones this year. So the Northern Lights project in Norway is now fully completed and ready to receive and store CO2 from industry. This is a very important project because it's the first globally to demonstrate cross-border transport and storage of CO2. So it can really unlock the value chain, especially in Europe. But the Porthos project in the Netherlands started construction, and the Ravenna hub in Italy started injecting CO2 offshore under the seabed. So definitely a lot of good progress happening there. Anastasia, thank you very much indeed. Some progress in Europe, some challenges overall for carbon capture and the projects that are in the pipeline. Really smart analysis. Anastasia, thanks for coming to the studio. Anastasia Tomasidou, analyst at Bloomberg NEF. Coming up, French bonds gain after Marine Le Pen tells Bloomberg the budget could pass. We'll get the details, the exclusive. This is Bloomberg. Good morning, happy Friday. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Emmanuel Macron vows to serve out his term as French president, promising to choose
a new Prime Minister who will work with everyone. In our exclusive interview, National Rally leader Marine Le Pen tells us a budget will pass if the government narrows the deficit more slowly.
C'est l'affaire de quelques semaines.
Well, it's a matter of a few weeks. We'll discuss it with the new Prime Minister. We'll work together.
South Korea's ruling party now says the president should be suspended. It's a major shift ahead of an impeachment vote for treason. This as opposition lawmakers reportedly block Yoon from entering parliament. And Chinese stocks gain on stimulus hopes. European and S&P futures, though, edge lower as investors await US jobs data later today. Let's check in on the markets then. We've had 6 straight days of gains for European stocks, 6 straight days of gains for French equities, despite the uncertainty politically. We are pointing lower in the session so far. Futures off by 0.3%. If that reverses and you're in positive territory, if you end with 7 straight days of gains over in France, that would be the longest winning streak in 3 years. Counterintuitive on some levels, but maybe it's a reality around how much was priced in since June on political risk in France. FTSE 100 futures currently off by 0.1%. S&P futures flat after dropping just 0.2% yesterday. Nasdaq futures were lower by 0.3, currently pointing to very modest gains. We look ahead to the non-farm payrolls picture, of course. Let's flip the board and have a look at how this is being priced across the Treasury curve. Expectations, of course, that you will get a cut on December the 18th. There's still a little bit of uncertainty, about a 70% chance being priced in by the markets. 4.17 right now on the 10-year. There has been money moving into Treasuries more broadly over the last few weeks with yields down. Currently at 4.17. We'll see how that adjusts on the non-farm payrolls print. Expected to come in with a number of around 200,000. Unemployment at 4.1%. It's the unemployment number that you should focus on, according to IM Live Team. Euro-dollar at 105, down 0.1%. Brent, $72 a barrel. And Bitcoin, 98,241, just down 0.8%, but a bit of a drop from that 100,000 level that it crossed earlier this week. Now, a measure of French bond risk fell on hopes that lawmakers will strike a deal on next year's budget sooner rather than later. Far-right leader Marine Le Pen told us in an exclusive interview that a budget can be passed in a matter of weeks, quelques semaines, she said, if the next Prime Minister is willing to narrow the deficit more slowly.
Getting to 3% in 2029, I don't think it's credible. But I'm not the only one. I don't think it's credible either to the president of the Cour des Comptes state auditor. Once again, these are simply promises, and they know very well that they can't keep to them. Mr. Barnier made that promise, and in reality, his budget worsened the deficit by 12 billion. So if we don't make significant, intelligent, structural savings with regard to the state, and if we don't put in place the conditions so that companies can work, invest without being suffocated with extra taxes, we won't get there. But with those 2 solutions, we can succeed as quickly as possible to get back to a reasonable deficit, even if the 3% was just decided on the back of an envelope.
How fast could that be?
Well, it's a matter of weeks. We'll discuss it with the new Prime Minister. We'll work together. We'll explain what our red lines are. Our red lines are we can't ask the French people to pay the bill for the mistakes of their leaders. That's what Mr. Barnier did. He massively increases taxation, he hits sick people, retired people, he hits everyone. And at the same time, once again, there's zero savings from the state, and that's inadmissible. Well, in any case, what I said, that the president's resignation is a personal decision on his behalf, and can only take place, in my view, when a political crisis takes place or an institutional crisis can find no other solution than the resignation of the President of the Republic. It is not the case for the moment. What I do wish, on the other hand, because for sure there will be new legislative elections in the next few months, is that we work on a voting system by then that enables us to have a real majority, whatever that majority may be. But the country needs a majority. It can't live for months and years with 3 blocs which, in reality, can't implement a policy.
French National Rally leader Marine Le Pen speaking exclusively with Bloomberg's Francine Lacroix in Paris. Let's get more in terms of the market reaction to the political crisis in France. Very pleased to say I'm joined now by Joyce Chang, Global Research Chair at JPMorgan. Joyce, fantastic to have you on the show. Let's start with France then, and then we'll move on to the ECB, because, of course, the two are in some ways linked. What do you make of this call by Marine Le Pen, suggesting that we could get a budget over the line, possibly in the next couple of weeks, but she wants the targets around the deficit to be faded, pushed back? She thinks they're too aggressive right now. Would the markets accept that kind of budget shaped around a slightly easier push around the deficit target?
Yeah, I think she's made her red lines very clear, and we think it adds about maybe 0.4% of GDP to the deficit. So you're getting close to 6% of GDP for the deficit. 5% is just not going to happen. But she's made it very clear that some of the red lines are not increasing the electricity tax, not lowering the reimbursement on drugs. So 0.4% of GDP, I think the market can accept that. I mean, more importantly, they do see this as more idiosyncratic, specific French risk, not something that should necessarily mean contagion or to the rest of the region. So just the willingness to sort of not have an impasse on the budget. But I do think you're looking at 6% of GDP as the footing for this deficit. 5% is just not going to happen here.
Oh, really interesting. You think it's 6% and the markets can broadly stomach that. Talking the market reaction, just in the short term. Yeah. Joyce, just in terms of the market reaction, we've seen these 6 straight days of gains for equities. You're well below 3%, but there's a lot of hand-wringing around the spread versus German bonds, but you're well below 3% on the French 10-year. What do you make of that market reaction? Is that rational?
So I think that what the market is really looking at, were you going to have something that was really prolonged and uncertain? And it looks from what Le Pen is saying that you could have sort of a quicker resolution at a somewhat higher number, but not an astronomical number. So I think the market had already priced in that 5% was not going to happen. What the bounce of those risks has, and this has been something the market's been watching since June. So it really hasn't impacted the rest of the region that much, just because of where expectations are right now. We do think also, the market is expecting, we are expecting that the ECB will ease, 50 basis points. When we look at just where the data is coming forth right now, we've pulled forward our forecast from January to December. And that's partly some of the disappointment with the consumer as well. So I think there's focus not just on what's happening in France, but what will the ECB be doing later.
Yeah, well, let's put a pin in that, because it's a big call. You're not alone, of course, but it's an important call. 50 basis points, a jumbo cut expected from the ECB in December. Joyce, what does that look like in terms of synchronisation of cuts then into 2025 if you get that jumbo cut as you expect later this month?
Well, we think that the ECB will come down to 1.75% at the end, but there's more risk right now. Some of that's around the U.S. election risk, slowdown in growth, some disappointment on the consumer as well. So we did pull forward the call, and we think that you're going to continue to see the ECB having to move lower, and that's sort of the structure of risk, or more structural in nature for the ECB if you compare it to the Fed, for example. When you just look at some of the forces they're contending with, the dependency on trade with China, the slowdown, some of the disappointments on the growth numbers, as well. And I think inflation is coming back to target, so that they feel like they have the scope to move.
You've got a call on the S&P 500, 6,500, Joyce. What is the time frame for that target, and what gets us there?
So, that is our target for the end of the year next year. And I think that much of that is driven by where we are in the business cycle right now. I mean, the business cycle is performing pretty well. And when we look at the Magnificent Seven, we still see very sizable CapEx and R&D into the sector, $500 billion, in the order of $500 billion. I think there's an opportunity for small cap to play more of a catch-up, more of a broadening of the rally that's in place. But the market is focused right now on deregulation, lower taxes, and trying to weigh that with the risk of tariffs and some of the policy uncertainty that could play out. But I think right now the focus is on the business cycle, deregulation, lower taxes, and continued CapEx and R&D investment that's going into the Mag 7 as well.
Joyce Chang, Global Research Chair at JPMorgan, thank you very much indeed. The deficit of France more likely to be 6% than 5% that Barnier had been pushing for next year. A 50 basis point cut expected from the ECB later this month. And the target on the S&P 500 of 6,500. A lot of that down to the capex spend expected from big tech. Always smart analysis across these markets globally. Joyce Chang of JPMorgan. Thank you. Right, let's get you up to speed on what's happening in South Korea, because it's a volatile situation, of course, and lines continue to cross outside the National Assembly and inside the National Assembly. You're seeing lawmakers there and a gathering. We had expected the president to attend, but that appears to be not happening right now. The Korean National Assembly Speaker has asked the President Yoon to delay that trip to Parliament. The key events that have unfolded in the last 12 hours or so is that one of the key members, the leader of the president's own party, has suggested that he would back impeachment of the South Korean president. And the leader of that party, the People Power Party, the president's own party, Han Dong-hoon, saying that the president should be suspended from office quickly. And so if you get a lineup of that person's allies, Han Dong-hoon's allies, within the leading power party, the People Power Party, which is the party that currently leads, along with the opposition party, then that does look like an impeachment is more likely for the president. So we keep across this story for you. Live pictures of the National Assembly in the South Korean capital there. Now, some of the stories making news this Friday. Donald Trump says he's chosen venture capitalist David Sachs of Craft Ventures to serve as his AI and crypto czar. The newly created position underscores the US president-elect's intent to boost two rapidly developing industries. Trump also nominated former Senator and businessman David Perdue as US ambassador to China. Perdue has lived in Hong Kong and Singapore, says he's looking forward to implementing Trump's strategy. New York police have released new photos showing the face of the alleged suspect in the fatal shooting of United Healthcare CEO Brian Thompson. Officers have offered $10,000 for tips to help identify and find the man. They also searched a youth hostel in Manhattan where the suspect allegedly checked in using a fake ID. People familiar with the investigation said the words delay and depose were written on a shell casing, and a live round recovered from the scene of the shooting. Antitrust regulators have approved Vodafone's £15 billion merger with Three to create Britain's largest telecoms operator by revenue. Both companies have committed to invest £11 billion in the UK's digital infrastructure. The Vodafone chief executive, Margherita Della, spoke to me after the deal's approval.
This is not about revenues. The rationale of the merger is to unlock investment, infrastructure investment. With the combination between Vodafone and Three, we unlock scale in our networks, which is what will allow us to build the biggest, the best network in the UK, reaching 99% of the UK population. That's what we do for a living. We want to invest. We want to invest to give a better service to our customers, and we want to invest to drive growth in our markets, which is where revenues come from. But the most important point for the financial setup of Vodafone is that all the markets in which Vodafone will operate next year, including the UK, will be growth markets where our own scale will allow us to drive growth with good returns.
Yeah, and you focused on that investment piece, £11 billion of investment. When does that investment start, Margherita, and how will you be financing it?
It starts as soon as we complete. We still have a few weeks to go as we go apply the final legal touches with the CMA and our partners. We will complete in H1 2025. And as soon as we complete, we will start investing, which is why, although typically big infrastructure projects take time, our customers will already see the benefit into next year of a bigger, better, broader network. In terms of funding, you know that the other activity we have done this year as part of the reshaping of Vodafone in Europe is to reshape our balance sheet. So we have all the funding we need to execute on our plan.
Specifically for Vodafone, as you look for those synergies, but also that investment, what does that do for headcount in the years ahead?
This is something we will be working on with our partners as soon as we are allowed to complete. In the grand scheme of things, think about it as small, as the impact of the merger. Of course, to give you an example, there will be duplication in the heads offices, but they have nothing in comparison to the investment plan that we have in mind.
OK, Vodafone's CEO, Margherita Della Valle, speaking to me yesterday on the back of the announcement that that merger will be going ahead. It's been given the green light by regulators. Now, coming up, UK digital bank Zopa raises £68 million in funding as it prepares to launch a flagship current account next year and a Gen AI product. When we speak with the company's CEO next, this is Bloomberg. Welcome back. Now, as technology continues to advance, of course, and convenience drives customer preferences, digital banking has been on the rise. Zopa, a UK digital bank, has raised £68 million in fundraising from Maersk owner AP Moller Holding. Interestingly, this as Zopa looks to fuel its growth and ahead of its current account launch. Jaidev Janardana, CEO of Zopa Bank, joins me in the studio right now. Jaidev, thanks so much for coming. So you've raised this additional capital. You had a lot of investors seemingly knocking at the door, wanting to invest. How do you deploy this capital?
Well, we are a profitable bank that is growing and serving people in the UK. So for us, the capital is really about creating the regulatory capital required for growing the balance sheet of the bank. We, of course, are also, having started our journey from focusing on borrowings and savings, moving into everyday banking, launching current accounts, as well as investing further into Gen AI, particularly to simplify customers' financial interactions.
What does that Gen AI story look for you, specifically as a customer?
I mean, I think if you look at it, today we all interact with our banks on a little small digital rectangle with our fingers. That's not how it was supposed to be, right? We would like to talk to people. We would like to talk to banks. And I think our hypothesis is that Gen AI leads us beyond mobile banking back into voice banking. And we think, ironically, using AI, we can bring back some more warmth, some more humanity into banking, and really simplify the banking interactions and the financial interactions that customers have, and use it to help them make better choices.
What are your priorities then for expansion in the years ahead for Zopa? What does the bank look like in 2-3 years' time?
So we started focusing on borrowings and savings. I think there's a huge amount of growth there. We expect to grow those products by 30% plus over the next few years. On top of that, as you said, we are stepping into everyday banking. We believe current accounts in the UK, while customers have a lot of choice, there is very few places where they can get both the ease of a neobank and value. And particularly in today's interest rate environment, we do believe that customers deserve more value than they get from current accounts in the UK, and that's our focus going to be there.
You've got 1.3 million customers right now. What's the target by the end of 2025?
I think we'd like to be 1.8, hopefully cross 2, about that.
And revenue and profit targets for next year?
From a revenue standpoint, we should be crossing 300 million this year. Next year, to cross 400 million will be the target. We again, few days to go for the year, but we are expecting to double profits from last year, and again, double again next year.
OK, interesting. You talk about interest rates. The Bank of England is a little bit more reluctant to cut rates as quickly as maybe the ECB, certainly the Fed will see.
Yeah.
Is that good news or bad news for your business line?
I think we are reasonably well hedged from an interest rate standpoint, unlike many other banks, particularly because we have got a big lending book. That said, from a UK consumer standpoint, we definitely prefer that interest rates are cut sooner, because we can see that particularly the resetting mortgages are putting pressure on consumers as they have to pay higher bills. Thus, a lower interest rate environment, I think, will be better for our customers, and what is better for our customers is better for us.
Do you see consolidation in the neobank space in the UK?
I do believe that there is some room for consolidation. A lot of us have built slightly complementary product sets, not just neobanks, but also fintechs. And if we really have to take on the incumbents and really make banking better and make the banking sector more efficient, then I think some of us joining forces can be for the better.
The choice sometimes is overwhelming. Monzo, Starling, you've got Zopa, of course. You've got Revolut. There's a lot to choose from.
Yeah, it's great to have that competition.
Yeah.
But even today, that said, if I look at the markets we are playing in lending and kind of savings, you're still competing with the big banks. They hold more than 85-90% share. So there's still more work to be done. And I think having the competition is helpful. And I think we just need to remain focused on the customer so that we can make a bigger change.
You are very much a UK-focused business, at least for now.
Yeah.
Does that mean when an IPO comes, when that timing comes, and I know it's difficult to put a pin in the date, but you would list in the UK, or is the UK not attractive yet?
I think the UK would be the natural place, given we are a UK business focused on UK customers, for us to list. We do not think, though, that the public markets are quite there yet, and definitely not the IPO markets. So as and when that changes, we'll be ready.
OK, Jaidev, thank you very much indeed. Appreciate you coming in on the back of that capital raise, £68 million for Zopa. Jaidev Janardana, the CEO of Zopa, on the back of that news. There's plenty more coming up. Stay with us. This is Bloomberg. We seem to be edging closer to a place where the president of South Korea could be impeached, given that some lawmakers, key lawmakers within his own party, seem to be aligning to that view. Watch the volatility then around the Korean currency, the won. You can see that spike up there, and that volatility continues. Let's flip the board and have a look at what's happening in France, because arguably there's less volatility than you might have expected across French debt and French equities. But of course, Marine Le Pen speaking exclusively to Bloomberg's Francine Lacroix, saying that a budget could be passed with the caveat that those deficit targets are moderated. Here's the picture when it comes to the deficit outlook for France and the overspend at the government level of France versus Germany. And these are the projections. 124% debt to GDP is the projection out to 2029, hence the need to get this under control, versus Germany's expected to drop just 58%. So that divergence is pronounced. And that is the problem in the heart of French politics right now. Let's flip the board and have a look at the key data point of the day, with expectations that non-farm payrolls are going to come in possibly around the 200,000 level, 220,000. This is the number to watch, though, according to Mark Cranfield of MLive, 4.1% in terms of the unemployment rate. Does it come in higher than that forecast? That could adjust views around the Fed. 70% expectations around another cut from the Federal Reserve. This data point, though, of course, could change that. Later today, 10 a.m. UK time, we're going to speak with the German Finance Minister, Jörg Cookies. Listening to that, 10:40 a.m. UK time, we're going to speak exclusively with the Bank of England external member, Swati Dhingra. A crucial conversation if you want to get a clearer steer on where the BOE goes. A dove, of course, of the NBC. A programming note as well: on Tuesday, Bloomberg Television will have live coverage of the inaugural Women, Money and Power event, convening the most influential female voices in finance from around the world to discuss consequential themes facing the future of business. The opening trade, though, is up next. This is Bloomberg.